Why does your bank want you stuck in debt, even when they tell you they're helping you? Most people think banks make money from interest rates and fees, and that's true. But there's a bigger secret they don't advertise. Banks actually want you to carry a balance on your credit cards and loans. Because when you're in debt, they make way more money off you. It's not just a few extra dollars. It's often hundreds or even thousands of dollars every year. Think about how the system works. Let's say you owe $3,000 on your credit card. The bank sends you a statement that says, minimum payment due, $35. That seems affordable, right? You look at that tiny number and think, okay, I can manage that. But that's the exact trap banks want you to fall into. If you only pay $35 a month, it could take you more than 10 years to pay off that balance. And in the end, you'll pay double or sometimes triple the original amount because of all the interest charges piling up month after month. Banks love it when people pay just the minimum. It's like collecting rent on your debt. As long as you owe them money, they keep earning interest every single month. Another trick they use? Low introductory rates. You've probably seen offers like 0% interest for the first 12 months. Sounds amazing, right? But here's the catch. One late payment or even going a penny over your credit limit, and suddenly that rate can shoot up to 20% or even higher. And now you're stuck paying way more than you expected. Sometimes banks even reward you with higher credit limits. It feels good, like a pat on the back. But what they're really hoping is that you'll spend more, carry a bigger balance, and pay them even more interest. It's easy to feel embarrassed or guilty about being in debt, but it's not your fault. The entire system is designed to keep you paying just enough to stay afloat, but never truly get ahead. And banks definitely won't tell you that, because your debt is their profit.
So how do you break free from this cycle?
First, try to pay more than the minimum each month. Even paying an extra $20 or $30 can save you hundreds of dollars in interest over time and help you pay off your balance much faster. Second, target the debt with the highest interest rate first. That's the one costing you the most money every month. Knock that out, then move on to the next highest. Third, don't trust the minimum payment numbers printed on your statement. Always check how long it will actually take you to pay off your balance if you only make minimum payments. Most statements have a little box showing you how many years it'll take, and it's often shocking. Fourth, call your credit card company and ask for a lower interest rate. It might sound intimidating, but many people have success just by asking. Especially if you've been a customer for a long time and have a decent payment history, they'd rather keep you than lose your business. And fifth, think carefully before using balance transfer offers. Sometimes they can save you money by giving you a lower interest rate, but watch out for transfer fees and high rates that kick in once the introductory period ends. Remember, being in debt doesn't mean you failed. It doesn't mean you're bad with money or irresponsible. It just means you're in a system that's built to make banks rich. But the more you understand how it works, the more you can take back control of your own money and your future. Know someone struggling with credit card debt or loans? Share this video and help them escape the trap. And if you want more hidden truths about money, tech, and scams, and how to protect yourself, subscribe for more simple ways to stay smart, safe, and ahead.